Mm. Okay, all right, all right. Guys, welcome back to my YouTube channel. So we'll be doing um Forex weekly outlook with my team and I. So let's start. Let's start. Let's start. All right. So we'll be analyzing. First of all, we want to know the direction of the dollar. That's the DXY. So let's go.
Okay. Should I start with the analysis?
Yeah. Let me see your what's your direction for the dollar index.
Okay. Let me see if I can share
Or
my screen right now.
all right.
Please, if you can see my screen, just confirm.
Okay.
Can you see my screen now?
Okay, I can see your screen. Yes.
Okay.
Yeah.
So the DXY. Okay. So here you have the DXY, which is the US dollar on
Okay.
TVC. So
Okay.
now let's go over to the higher time frame. Let's see what direction looks like, and let's know
Okay.
what you're expecting for the week. I think I already had some analysis here before now, but then let's see. So this is the dollar index on the weekly time frame. This is the dollar index on the weekly time frame. And overall, what can we observe here? Overall, you can see a bullish trend on this market. And what is a bullish
Yeah.
trend? The highs have been taken out.
Yeah.
You can
True.
see higher highs, higher lows, and the highs have been taken out. You can see massive upward push of the dollar. And this is on the weekly charts. So, when you see a trend being bullish, what you expect is that the market should keep up with that bullish trend, right? So first of all, I
That's
am
true.
purely an SMC or IPP trader. So once I see a trend, I want to ensure I keep up with that trend until the market changes direction, right?
Yeah.
Until the market changes direction. So overall, what I can see here are a series of higher highs. Just for illustration, I can see a series of highs being taken out overall. You see this movement, then see a continuation. I'll see this, then the
Hold on, bro.
high
Hold on, Steve.
you had here initially was also being taken out. So we call this a bullish market trend, right? So we call
Yeah.
this a bullish market trend. And here you don't expect the lows to be taken out. You expect only the highs to be taken out. So now on
Taking
this
off.
weekly
Yeah.
chart, since the highs have been taken out, you already have that as on the back of your mind that the highs have been taken out on this market. So your expectation is that this previous high that you had here, this high was formed. Remember, we're on the weekly time frame, and this high was formed on this is September of 2022. So you expect overall, you're expecting this high to be taken out in no meantime. Remember, you're on the weekly charts, so this should be a range overall. So first off, you expect this high to be taken out overall. So let's move down to the daily time frame to see what's happening. So here on the daily time frame, now you have okay. Now let's analyze from this. This is 2021. This is April 2021. Now what can you see here? You can see a series of higher highs being formed. Also, a series of upward push. You can see highs being taken out. The movement you're seeing the highs have been taken out. You're seeing this. You can see highs taken out. So here you have a bullish market. You don't expect the lows to be taken out, only the highs, right? So overall, you're seeing this happening in the markets. You're seeing highs being swept over and over again. Down to this point, you're seeing highs being swept. This is your higher high, higher low. You have another higher high, then a higher low. Then you have this higher high. And remember, you said in a bullish market, you are not expecting the lows to be taken out, right? Now, this was the previous high that got formed, and this high produced this low, right? Now, this low gave a movement that broke this high, right? This was the previous low you had. Sorry, let me quickly mark it out. So you had this high here, you had this high, then you had this low was formed. Sorry. So you had that high, then you had this low. Now you have an upward push that took out the previous high you had, right? And remember, in a bullish market, you don't expect your lows to be taken out. You expect only the highs to be taken out. Now the market came and took out this low here, which is this particular low you had here, the previous low that got formed. The market came and took it out. Now this is what I call, or this is what we SMC traders and ICT traders refer to as a change of character or a market structure shift. So you can call this a market structure shift. You can call this a market structure shift. Now, since you have a market structure shift, remember price was in a bullish order flow. Now you're expecting a bearish order flow. Why? Because the market has changed structure. So you're expecting a series of lower lows and lower highs to be formed. So in this market, you're expecting the lows to be taken out and no longer the highs like you had in the previous market structure. And remember, you identified a shift in market structure here. So henceforth, you're expecting the lows to be taken out here. So you expect a bearish order flow here. You're expecting the lows to be swept, just like you have here. You're expecting this market to be sweeping the lows, sweeping these lows, causing break of structures, and just continue in that manner. But here, remember what you had on the weekly time frame. Remember, these are just internal structures, right? On the daily time frame, it became an internal structure. And remember, the higher time frame always controls what you have on the lower time frames. So on the weekly time frame, you had sorry on the daily time frame you had a market structure shift. So you should be expecting in no meantime that this market, remember what you had on the weekly time frame was for this market to take out this particular high you had here, right? So you should expect this
Yeah.
market to react at a valid institutional reference point before taking out this high, right? So now I can call this now on my daily time frame. If I go back to the daily time frame, so I had a market structure shift, identifying a bearish order flow. So in a bearish market, I expect the lows to be taken out. So I was seeing the lows being taken out. So I was seeing series of lower lows, lower high, lower lows being formed. Low was taken out. Now I don't expect the highs to be taken out, right? Since I have a market structure shift for a bearish market, I expect only the lows to be taken out. Now the market came and swept this high and this high also. This was an internal high and this was an external high. So the market swept both of them. So this I can call a minor change of character or another minor market structure shift. And this I can call the major market structure shift. So I can identify this as my major market structure shift. And whenever I have a market structure shift, remember you are shifting now from a downtrend to an uptrend, right?
Okay, yeah,
And your overall target is this particular range you marked out here, right? So you expect the
yeah.
market to react at a valid point here and push massively to the upside to take out this high. Is that okay? So now let me use basic annotation to just state it out. Or is there any need for using annotations? Since we are not taking any class, we are just making an outlook.
Yeah, no, no need, no need. Just tell the direction.
Okay,
Just
let
tell
me
the
just make it.
direction, and yeah,
Okay. So now here you have a market structure shift. And now the market is looking like it's reacted. You're seeing a massive upward push here. Let me quickly identify it from this particular point, right? You're seeing a
yeah,
push. So it's looking like the market reacted off a valid zone here that's giving off this massive push to the upside, right? So
yeah.
now let's mark out this particular zone where the market is seeming to react off.
Mm,
So the market seems to be giving a massive push from this particular zone. So our next target should be, remember you are in the daily time frame and this should be forming an internal structure. So your next target should be that the market should take out, should sweep this
yeah.
high. This should be
That's
your next draw
yeah,
on
that
liquidity,
I yeah.
right? So this should be your next draw on
Yes,
liquidity. Remember,
yeah,
we SMT traders and ICT traders, we term it as, we see liquidity as residing at previous highs and previous lows. So
yes.
this was a previous
That's
high
true.
that got formed, right? And you see this as your draw, your next draw on liquidity on this market. Since this market is giving off a massive push off of this zone, so you expect overall that this should be your next draw on liquidity. And remember, you're still on the daily time frame, but on your weekly time frame, you're expecting this range we marked out here to be
Yeah,
swept.
that
Okay,
wire.
this range also formed a previous high. So this is a range, and this is also, you can also add this as a draw on liquidity. That's why I marked out as DOL. So this is also a previous high, and this also is a previous high. So while we are seeing a bullish move, we expect this high to be taken out, our first draw on liquidity. Then overall, this should be another draw on liquidity. Now, while you are looking at that, also don't forget you have a huge imbalance here. You're having a huge imbalance here. I could have taken out time to explain what imbalance is, but since you're just making an outlook, there will be no
Yeah,
valid need for that. So you're expecting this imbalance to hold price. So if markets moves up to this point and you're seeing a little reaction, now let me use a part to explain what I mean. So imbalances are also valid points in the markets that can hold price, right? So since you are seeing a massive push off of here, and overall this range here and your and draw of liquidity is your overall target. So if the market gets to this point, you can see a little reaction here.
little reaction.
Yes, and
Yeah,
since you're on the weekly time frame,
there will be a retracement. Yeah,
yeah, there will be a little
then
reaction here. Then this
then
can be a
push up.
form of a trap to those thinking the market will push down and take out all these previous lows,
True,
right?
true.
So the this will induce people thinking markets will come here and take out, sweep all these lows, but this is not going to happen. So you're going to see just a little reaction here, then the markets will continue to push up. to take out this draw on liquidity, right? So you're going to see this move. You're going to see just a little reaction here. Then the market is going to do something like this and sweep this other high. Why are you thinking the market should do this? Because your higher time frame always controls the lower time frame.
That's true. That's
So,
true.
so this is what I have for DXY on the weekly. Now on my daily time frame, let's come to the daily time frame. I want to quickly show you guys something on the daily time frame. Let me clear this out. Let me quickly clear this out. So if you come down to your daily time frame, now remember what we said here on the weekly time frame that fair value gaps have the strength to hold price to some extent, right? And remember, market is bullish here, but you see, market run into this fair value gap, this huge fair value gap here. As you can see, markets run into this huge imbalance, which you can also call your fair value gap, and you are seeing a small reaction. You're seeing this. You're seeing this small reaction here. So this is a trap to those thinking the market is going to continue going bearish, right? So this will be a trap to those thinking the market will continue going bearish. But this is not going to happen. This is obviously not going to happen. Why? Because on the higher time frame, we're already seeing a push, a massive push here. So this will just be a trap. So markets will just do something like this. Now I already marked out a zone here, as you can see on the daily time frame. I already marked out a zone. I think I picked this zone here on the 4 hour. So I expect this imbalance to hold price to this extent before pushing up. Before pushing up to take out this draw on liquidity on the weekly time frame. So let me quickly show us
Okay.
how I got this my 4 hour zone. Okay, I think this was where I got it from. Now this is a valid order block. This is a valid ICT or SMC order block. As you can see, you're having a wide FVG. You expect this FVG to be filled up down to this point, then tap on this last bearish candle before this massive expansion to the upside. So you expect the market to do something like this, just like I've marked out on this curve. So you're expecting the market to do something like this, hold price to this point, then tap on this valid point before that massive upward push. So I expect this imbalance to be filled to the downside, then tap on that zone, then I expect a massive upward push. So overall,
Overall, DSY is bullish, but minorly bearish. Okay, we're looking at um it's been bearish for some time. Then overall is bullish, right? Juice network is affecting him. All right, so we'll continue. So what we're looking at is um DXY is overall bullish, but minorly bearish. All right, that means we are looking at overall for GBP USD. Since it's overall bullish, then we're looking at GBP USD going down, SAU USD going down. That's the gold going down. Also for some USD card going up, USD JPY going up because of the overall trend. So I'm coming. I'll quickly share my screen to show you guys what I'm saying. Okay, do this. I think do this back. Do this back. All right. Jude, share your screen so that
Yeah.
they can see it.
Sorry, sorry. Okay, I'm sorry for
All
the
right, all right. Jude,
interruption.
no problem. Let's go. Let's go. So we are saying DXY is going up generally, like overall, but minorly
Yeah,
bearish.
on the
Then
weekly time frame.
for that
Yes, on
means
the weekly
for
time frame.
GBP
Yeah.
USD we
Yeah.
are minorly bullish. Same for gold. Same for all the pairs that are against USD. Then for USD pairs, that's USD JPY, USD CAD. We're expecting it to go down for right to
For a short
that's
while before that
minorly bearish. Yes, before the okay, good, good, good. That's good. That's
for the
good. That's
massive
good.
push. Yeah. Okay, so
Great.
I was showing us how I got my order block down here that I'm expecting to hold price, right? So this is just a fake downward push of this imbalance. This will act as a trap to those thinking that the market will continue going
To
bearish,
continue going down.
right?
Yeah.
Yes, but this is not going to happen. I'm expecting this order block I have here to hold price, right? So the market is going to trade into this order block here. So the market will trade into this order block, which is this particular one here. Then from here, I expect a massive push to the upside that will take out this next draw on liquidity, which is this draw on liquidity I've marked out here. Now, and this is the daily time frame. And on the weekly time frame, I expect it to even push more to the upside. Remember, you still have a huge fair value gap here. So I expect a fake reaction here, just like we have on the daily time frame. A fake reaction before another massive push that will take out this next draw on liquidity. So the if you've been on the market for a long time, if you've been a trader for a long time, you should know that the dollar index always correlates with other
Yeah.
dollar
That's why
pairs.
we're doing it first. Yeah.
Yes, it always correlates. If you have the direction of the dollar index, most likely, like 90% of the time, the movement correlates with all these other USD pairs, like USD JPY, USD CAD. But you have an inverse correlation with GU and EU, which
Yeah.
is GDP USD and Euro USD. So yes, and you can also invert this to give you a direct correlation to GU and EU. So you can make your analysis
That's
here, then you
correct.
can invert the scale, right?
Yeah, that's correct.
So I can invite my scale here. So I have something like this. So if I invert this scale, I have something like this. So
Yeah.
this will be a similar reaction or similar movements now because this is now an inverted scale. So this should be a similar movement to GU and EU. Then an inverse movement to USD card, USD JPY, and other USD pairs. So this will be my outlook for DXY for the coming week. So this is what I'm expecting for this coming week for DXY.
Great, great, great. That's nice. That's nice.
Yeah.
All right. So I hope we all got that. I hope we all got that. Okay, so
95.
let's just show them GBP USD and maybe one other
Mm.
maybe USD gold. Let's see gold and
Okay.
GBP USD. Let's see.
Okay.
Okay. First off, let me move on
Yeah.
to GDP. I'm going to be showing everybody the chart I have throughout last week.
Mm. Oh, Adamale.
Okay, I'm coming.
Mm. Pathology,
So remember, we
everything
said 90%
is
of the time
pathology.
there's always a correlation between. Sorry, there's an inverse correlation between GU and DXY. 90% of the time. So, and remember, for DXY, we had a bullish outlook, overall bullish outlook for DXY. Overall, we had a bullish outlook for it. So overall, we should be having a bearish look for GU since they have an inverse correlation, right? So throughout last week, GU has been given a massive push to the upside. This is the 4 hour time frame. You can see a series of higher highs and higher lows being formed, indicating a bullish order flow down to the upside. Now for the retail traders, this gave us a trend line, right? As you can see here, this move gave us a trend line, a nice trend line. You can see a tap, push to the upside, another tap, push to the upside, and just like that. So this gave a trend line. The retail traders should understand what I'm talking about here. So here you had the trend line here, and there was a nice breakout and retest that happened here. So you saw a breakout of this trend line and a retest. So the people that sold around this retest zone, the retail traders had their zone here. Um, so the retail traders had their zone somewhere around here. They had a zone here. So they saw these breakouts and they waited for that retest, right? So the people that sold these markets around this zone made a lot of profits last week. So if you sell around here and you put your TP to just be the previous low, remember liquidity resides around previous lows and previous high. So this was a previous low that we had on the markets. So if you put your take profits to be on this low, so this low forms your drawn liquidity. Previous low you had forms your drawn liquidity. So you sold around here, around this retest zone, then your TP was around here. So this is 55 pips, easy 55 pips for you if you're a retail trader and you saw these breakouts and retests. So if you sold around here, you have an easy 55 pips to go. So after this breakout and retests, although I didn't trade this, I'm not a retail trader. Like I said earlier, I'm majorly an SMC or ICT trader. So I was catching these moves. I was just watching the move last week. I was seeing a series of higher highs, which is a break of structure. This will form a break of structure for me as an ICT trader. Here is going to form my break of structure from here to here. Then I'll identify a valid zone that caused this break of structure. So as an ICT trader, once I see a break of structure, I'm going to identify a zone that caused that break of structure. So I'm expecting the markets to retrace back to that zone before pushing to the upside again. So if I identify a zone, let's say I picked out a zone around here. So I'll wait for this market to retrace down to this zone before picking up its orders, right? So this is how the big bands trade. So these are the big bands trade. Sorry for the noise, please. Please, can you all hear me? Sorry, sorry, anointing, because can you hear me? Sorry, can you hear me? Okay, so here as an SMC or ICT trader, sorry for the break, please. Sorry for the noise. So as an ICT trader, I'm expecting the market to retrace down to this zone, right? This valid institutional zone before picking up its order and pushing up to the upside again. So I'll mark out my zone here, wait for the market to retrace down to this zone, then enter. If I see a valid confirmation, right, I'll enter for a buy. Then my next draw on liquidity will be the previous high. So liquidity resides on previous highs and previous low. So this should be my next draw on liquidity, and I'll continue riding these markets since I'm seeing a series of break of structure to the upside. I'm going to continue riding these markets till that is no longer confirmed, right? So this will be my next round liquidity. I take my profits here. Then this is another break of structure. I wait for the markets. I mark out my zone around here, around this leg that caused this break of structure. Then wait for market to retrace to this point again. Wait for the market to retrace down to this zone. Then if I see a valid confirmation, I'll enter for a buy. My next draw on liquidity is going to be the previous high again. So I take my profit and I continue riding till this is no longer
Yeah,
valid, right? Now, why is this no longer
yeah,
valid? You see, I'm seeing a higher high, higher low, higher high, higher low, and down to this point, right? Now you saw this low was swept. So if I am an ICT trader or you're a retail trader, we are both correct in this market, right? So
yes,
you as a retail trader, you're trading this trend line, and here you saw a breakout and a retest, and you sold. So now you're expecting a bearish move. But as an ICT or XMC trader, here I saw a change of character. So that means both of us are correct in this market. So here I saw a change of character. Why did I call this a change of character or a market structure shift? The low I was expecting to hold price here. I was expecting this low to hold price, but that didn't happen. But market came and swept this low. So I'll mark this as a market structure shift. So overall, I'm expecting the market here to be bearish, right? But before that happens, I have a valid zone here. See this zone
yeah,
above the disclaimer
residing
block.
above, yeah,
Yeah,
above,
so
yeah,
I have a valid zone here above this disclaimer block. So I'm expecting the market to come and sweep all this liquidity here first before that bearish move happens. Is that okay? So overall, this is what I'm watching out for in this market. But the people that
that's
sold
great. Okay.
around this disclaimer block, sorry for not explaining all these terms. Remember, we are just making an outlook.
If you
And
want to learn, you can message us. If you want to join our
yeah, so
mentorship program, you can message us so we can
if you
teach you
want
these
to
things.
yeah, if you want to learn the basic terms we are using here, if you don't understand what a market structure shift is, you don't understand what liquidity is, what break of structure is, what
Yeah,
reference points in the markets are. So you can message us for mentorship or for basic lectures. And I think we have a free mentorship starting tomorrow, right?
yeah, free beginners class. Yeah.
Yeah, we have a free beginners class
So
starting tomorrow. So we'll also be going through all these basic terms. So make sure you're not missing out on all these classes if you're a beginner and you don't understand what all these basic terms are. So the people that sold,
I'll just
remember you're
I'll
on the
just
4 hour.
drop the link.
Yeah, so you're going to drop the link on the WhatsApp group so
Yeah,
you can join the channel. And make sure to also like and subscribe to our YouTube channel. We'll be dropping great content for you guys.
great, 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 great.
So Now, this claimer block also acted like an FVG here. Now, if I clear out this upper zone, remember you have a wide FVG here. And when I was analyzing DXY, I said FVGs always gives fake reactions, right?
Fair
Before
value
your
gap. Yeah.
overall before your overall movement plays out. So the same thing happened here. Now imagine you don't even know what a claimer block is, right? And you just know what an FVG is. Now imagine you mark out your FVG here, and you already know from your knowledge of FVGs that FVGs always have the potential to hold price to an extent. So if you only mark out your FVG, it's intersecting with this inverse FVG. Sorry for using those big terms, but if you don't understand what those are, you can sign up for a free class
Yeah.
starting tomorrow. So the people that had a confirmation for a sell around here will also make profit in this market, right? So if you're looking for sell confirmation, you go to the lower time frame. I'm not going to be doing that right now since we're just making an outlook. So people that had a confirmation around this zone, if you sold around here, you are sold around here, this will still give you a nice RR, right? This like almost
Yeah.
1 to 3, this 1 to 2.8. That's almost 1 to 3. If you had a valid confirmation around here and you entered for a sale, so you can see that whatever analysis you are making use of in the markets, and so far you're sticking to your analysis, we can all be correct in the market and we can all be making money in the markets. So far you know what you are doing, your outlook can also be correct while you're trading as a retail trader and I'm trading as an ICT or SMT trader. We can both have the same movements in the market, right? And we can both make
Yeah.
money off the same markets. So this is what I have for my GBP USD, and this is a move I'm expecting
All right.
for
So
coming.
um for those of us watching and want to understand these terms, all right, you can just message us, all right, or you join the free beginners class so that we can take you through
Yeah.
for beginners lectures and all. But if you want the mentorship, you can still message, all right. Also, so the overall outlook for DXY, we're overall like bullish, but for short term is bearish. Then for same thing for opposite pairs, just know that, all right. So
Yes. So
basically
for
your
GU,
GBP we're expecting
overall, yes, a
overall
bearish
bearish, overall
market.
bearish. Yeah, good, good,
Overall
good,
bearish
good,
market.
good, 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 good,
So
good. That's
yes, this is what I have for my DXY and GU for next week.
all right,
So
all right, all right. That's
let's see how it plays out. Let's see how it plays out. I think
all right. That's
these weekly sections we are going to be holding it starting from now. We'll be holding it
yeah,
every
yeah,
week,
yeah.
every Sundays.
Every week,
We're
yeah.
taking
So
weekly outlooks
that's
for pairs, major pairs, by the
all
way.
right. You can send a screenshot if you just screenshot it and send it to the group so that we'll know when price get there. We'll know how to take the trade.
Okay, okay. Yes, if price gets here and you see a confirmation entry, then you can enter for a sale around this zone. You might not want to jump into this market. Just you can wait for it to play out first and tap into this valid zone before selling this market. But overall, you have a bearish move on this market.
Great, great, great. I want us to do something that is like, let's just do. Okay, so we've known the direction for the USD and all, those are the major pairs. I want us to just do some volatilities. I don't know if you have any. You can do if you can do one volatility, let's say or two volatility 75 and volatility 100. Let's see. We can just do the analysis here and let's see for those of us that are trading volatility too, so we can also benefit.
I've not really been trading deriv for a long time now.
Yeah, yeah, yeah.
I've been focused on currency pairs, right? So, but
Yeah.
let's see. I don't know.
So just
Let me
do
see
you can
what.
do a fresh analysis on um VIX 100 and VIX 75. Those are the two pairs we just concentrate on.
Okay, let's look at something before we go.
Someone just asked boom and crash. How about boom and crash?
Well, the point is, whatever strategy you are making use of, right? You can apply it to any currency pair or any
Yeah, any
markets.
pair, any market you can. So far,
It definitely work
you
out
know
for you.
how to. You understand the basics. Yeah, market structure.
Yes, why you
You know,
understand the basics of
yeah,
market structure and you know what you are doing.
you can still trade
I,
boom and crash, but you can just put the boom and crash you want us to analyze so that we'll do it. I'll do it. The boom and crash so that we'll analyze it from the and all and tell you the direction of um boom and crash, the one that you want. Is it boom 1000, boom 500? Which one do you want us to analyze so that we can do that? Okay, so let's start with vis 100. Let's start
okay.
with vis 100. Okay, he said boom 1000 and crash 1000. All right, okay. So we'll do boom 1000 and crash. I'll do boom 1000 and crash 1000. We'll look at it from the higher time frame perspective and all. We'll do that. But before then, let's just do vis 100 and vis 75. Also know that we can also send from this analysis. We can even send a current trade now that you can even take. So just quickly, um, you can also just get your accounts ready in case we see a short signal that we can send to you.
Yeah, 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 of course. So from starting from this point, this VIX 100 and this is a 4 hour time frame. So I'm seeing a series of higher highs being formed from this point. So this is a series of higher highs. Highs have been taken out. Highs have been taken out up to this point. Now I'm expecting this low to hold price, right? But instead, that didn't happen. I saw this low was taken out. So this is what I identify as a shift in market structure. I'm going to mark this out as a shift in market structure or a change of character. So I have this as a market structure shift. So now, since I have a change of character, I'm expecting a bearish trend, right? And in a bearish trend, I expect only the lows to be taken out and not the highs. So here I'm seeing a series of lower lows, lower high, lower low, lower high, and just continuously to the downside, right? So as an SMT trader, I'm going to stick to the trend of the market.
Yeah,
So here I'm seeing a downtrend. You stick to the trend of the markets, and your entry should be on the points where you are seeing a valid institutional reference points. So a break of structure to the downside. Now I have another break of structure to the downside along this zone, right? Now, okay, before we even had this break of structure, from the previous break of structure we had, now I'll have to identify a valid point where the market is going to retrace back to before picking up its orders, right? So as an SMT trader, I already have a zone here. I can already see a zone, a valid zone, which is here. I won't be going into the basics of how I got this zone because this is just an outlook.
yeah.
So I have a zone here. So the market came back to this point and picked its orders, right? And where if you enter the markets for a sale around here, here should be your take profits.
With the old low. Yeah,
Yes,
I
the
get the old
previous
low.
low should be your take profits. Why? Because liquidity resides along the previous lows. So if you're entering the markets for a sale at this point, here will be your previous draw on liquidity, right? So you can mark this out as your DOL. So this will be your previous draw on liquidity. So you're expecting the market to take out this low, right? This should be the reason why you have your take profits here. So if you enter for a sale around here, you have your take profits on this draw on liquidity. Now, also, this draw on liquidity also caused a break of structure, right? So this is a draw of liquidity, and this is also another break of structure. So now you look for what caused this break of structure. As an SMC trader or an ICT trader, you're going to look for what caused this break of structure. And on marking out what caused a break of structure, you look for a valid zone, a valid reference point where the market will retrace back to before picking up its orders. So I won't be going into the basis of all of
Yeah.
that, but here is another valid zone where the market can retrace back to, and there are confluences that involves you picking a valid zone, right? You have confluences
Yes.
that involves picking a valid zone. So this is another valid zone. And my next draw here is the previous low. Remember the market tapped here, formed a lower low, then a lower high. Now the previous low that was from was this low. So I'll mark this out as my next draw on liquidity. Why? Because liquidity is resting, people's stop losses are resting below this point, right? So if you enter for a sell here, your overall target should be this low. So now there are several opportunities before the market gets to this point. You have several sell opportunities. You should not be looking out for buys, but looking out for only sell opportunities down to this point, right? So now you had a valid zone that was tapped here. Now overall, you expect this market to take out this draw on liquidity. So you can come down to lower time frame and look for sell opportunities down to that point. So now you had a tap here. Now from here, these are internal structures, right? You can apply the same thing you applied here on the higher time frame for internal structures. The same you had break of structure, a series of break of structure, then you had a change of character, right? So now if I was to enter this market after this tap, remember I'm entering for a sell. So applying a confirmation entry here, this is a 1 hour time frame. Okay, let me come down to 30 minutes. Now I saw a tap on the higher time frame zone. I saw a tap on the higher time frame. So I'll come all the way to 30 minutes. So here you can see a series of break of structures down to this point, right? Now this low, this was a previous low that was taken out. So this is a change of character for your confirmation entry, right? The same thing you applied for the higher time frame, you apply for the lower time frame. So here is a change of character or your market structure shifts. Now, what caused this market structure shift? After identifying a market structure shift, the next thing you should think of as an SMC trader is what caused that market structure shift. So remember, there are confluences in marking out what caused a market structure shift. And the first one, okay, let me just go through the basics. One of the first confluences is having a fair value gap, right? Or an imbalance. So this is a valid fair value gap here for marking out this zone as a valid entry point. So that's one of the
Yes.
confluences for marking out a zone. So if I mark out this zone, I'm going to wait for markets to retrace back to this zone before entering for a sell, right? So this is why 80% of markets is waiting for the markets. Sorry, 80% is actually knowing the direction, and 20% is waiting for the market to actually play out.
Yeah.
So I wait after marking out that zone. I'm going to wait for market to tap into this zone for a sell. Then my SL is going to be just above this zone, and my take profits will be previous lows, right? I entered the market from here. Remember, this was a previous low. This was a previous low. Can serve as my TP. Also, another person can come and mark this as a previous low, which can also serve as a take profit, right? Because liquidity resides at this zone. So someone can come here, take his profits, or you can even enter for two positions, right? So these are all entry strategies. So the more you stay on the market, the more you learn these entry strategies. Some people can open two positions at this zone. Then their first take profits will be here, and their second take profits will be all the way down to this point. I don't really trade the risk, and I don't understand how to calculate your pips movement, right? So, but anyways, this should serve like almost 5 RR as I can see from here. So
Yeah,
this your risk reward ratio here, right? Okay,
more
sorry,
than
I can see
more
eight.
than.
Okay, this is 8. So you have all of these to
Yeah,
yourself.
eight.
So this serves as a take profit for you. Now,
Right.
in re-entering this market, now here is a market structure shift, right? You saw a tap on this zone, and this also served as a break of structure. There are several opportunities in the market. There are millions of opportunities in the market. So once you miss an opportunity, there's always a valid point for you for re-entry. Keeping in mind that we have a bearish flow, right? Now this after this market structure shift that served as a confirmation entry on this valid zone. So you can also come here and mark out. Here is a break of structure. After this market structure shift, you're expecting lower lows now. Now you saw a tap here, then a break of structure, right? So you can also mark out a valid institutional reference point here that the market can retrace back to, right? So this is another valid point as an SMT trader. Why am I marking this out? I saw a valid FVG here. I saw an FVG, and this was a last upward move. I saw a bullish candle before this massive expansion to the downside, right? So if you'll be following our mentorship from tomorrow, we'll be going through all these basics of picking reference points in the markets. So this was another valid zone, right? You can see opportunities are endless in the markets. So someone entered from here, made money, but you didn't see that, or let's say you missed it. So this is another valid point for you to enter and make your money in the markets, right? So
Yeah.
this was another valid point. You enter from here for a sale. Now your next drawn liquidity should be a previous low, right? That go formed, which is this low. So if you want to be greedy enough, you enter for a sale here, and your take profit should be all the way down to this point. Now, if I want to enter this market, let's say I want to enter this market for a sale. Okay, let me see. Let me see. I have this zone here. Okay, all this liquidity build out above my zone. I saw it tap deep. Okay, I'll tap here. Let me see. Okay, so if I am to enter this market for a sale, remember our overall bias is that we are selling on this market, right? So if I'm to enter this market for a sale, this should serve as an inducement to this valid zone I marked out here, right? So inducement is under confluence I use in taking trades. So this should serve as an inducement to this zone. So if the market retraces back to this point, then I can sell off this zone. And if not, I'm going to leave the market to just play out and sell all the way to the downside, right? But if I see a retracement down to this point, then I'll obviously sell at that particular zone. So I'll wait for the market to retrace down to this point, and this should serve as an inducement for those that entered early, right? Take out their stop loss, then take me in from this zone. So I'll be shorting the market from here. Short the market. Sorry for that. So I'll short the market from this zone, and
Although we're
my
currently
stop loss.
buying to that zone,
Sorry.
I sent a trade setup. You are buying to that zone that you marked.
Okay, you're currently buying to this zone, right?
Yeah, yeah, yeah.
Okay, that's also valid. That's also valid. Now, if you come all the way to let's say 10 minutes time frame or 5 minutes, you can see buy opportunities to this zone. So that's why opportunities are endless in the markets. So if you're not a scalper, right? If you're not a lower time frame trader, so you can wait for this market to tap you in from this zone before selling this market. But if you are a good scalper, you can come and find opportunities at let's say 5 minutes time frame or 10 minutes time frame or even lower for a buy up to this zone, right? You can take your profits here. Then if you even see the opportunity again, come to the higher time frame, then sell again from this zone down to this point. So opportunities are always endless in the markets. So this
Yeah.
should be my bias for VIX 100.
All right. All right. All right.
Yeah.
Let's do let's do V75.
Okay, for VIX 75, let me see. VIX 75.
This
Okay.
the V's 100 might even start before the call ends. So let's just. But that area is around. Let me just call it out. That area is around. I think.
Okay, you mean this year, right?
Yeah. So maybe some you can just set a sell limit around 1950.695. Then your stop loss
Okay,
just
please
above.
apply proper risk management
Yeah, yeah, yeah. Just
if you're taking.
above that's around 2000. Then your TP is the final TP, which is the old low, which is around 16. I did a live yesterday, so I think we were targeting that 163.8.02. Although the market we sold took our first TP, then we're still waiting for the sell. It's a sell, but
Okay,
currently
so
we're
please.
still buying to that zone, then we'll sell to the final TP, right? So all right, let's go
Okay,
to let's go to VIS.
that's good.
Let's go to V75.
So for VIX
V75.
75, remember if you're analyzing the markets, always go from your higher time frame to lower time frame because your higher
Yeah.
time frame controls the markets. Now let's start from the 4 hour time frame. I'll just go over to my 4 hour time frame and let me see what I have for these markets. Okay. Now overall, I can see a bearish trend, right? The market is making a series of downward push on the 4 hour time frame. So now I already know what I'm looking out for. I'm looking out for sales on this market. So I should not be buying on this time type of markets, right? So overall, I should be looking out for sales. So let me come down to my 1 hour time frame. So on the 1 hour time frame, I'm seeing the same thing. I'm seeing a series of lower lows, lows being taken out, seeing lows being taken out, retracements to a valid point. Okay. Now retracement to a valid point. Okay. Okay, this low again was swept. This low was swept again. So after sweeping this low, okay, I can already see a zone here. I can see a zone already. You can see a zone already. Now there's what we call efficient delivery in the markets, right? Now if you look at this leg, this downward push here, I can't really see a valid zone here, right? Because everything is being efficient. Now if you look closely, there's no FVG on this leg of the markets, right? Now the FVG I had here has already been traded into. Now you can see the markets um the FVG here attracted this market down to this point, then pushed to the downside again, right? So now on this leg from here down to this point, I can see a valid zone. The only valid zone I can see on this market, I can see two valid zones on this market. So I can see a zone here, I can see a good zone here, right? So the market can retrace to this zone, and the market can also retrace down to this zone here. Why did I mark out this zone? Because I'm seeing a good FVG that I expect the market to trade back into, right, before selling. So if you have a market like this and you're having two zones, you have two valid zones. Now this should serve as your decisional point of interest. This is a point of interest in the market that I have. So this is decisional. So this is additional point of interest. Then this, sorry, let me quickly fix that. And this should serve as your extreme points of interest. So in this kind of markets, having 2 points of interest, you're going to be using a confirmation entry, right? So you don't lose money in this market because you have two valid zones that you're expecting market to either retrace to this point or to this point before selling, right? So you can wait for a confirmation entry here. Once the market taps this zone, you wait for a valid confirmation before entering for that sale, or you wait for the market to tap into this zone and also wait for a confirmation before entering for a sale. Or if you have, or what another person can do is that they can enter this for this market for a sale from the decisional point of interest. You can enter for a sale here, then their stop loss will cover both the decisional and extreme point of interest, right? So the stop loss will cover all of these two zones. Then the take profits will be at a previous low, right? Remember, this first drop of liquidity has been taken. So the people who had their take profit here have already take their profit and left. So your next take profit should be another previous low, right, that you had on the market. So you come here, okay. This is a valid point here that can serve as a draw on liquidity. So this is a valid point that can serve as a draw on liquidity. So I mark out this zone as a draw on liquidity. So if you want to be greedy enough, you can hold this market down to these points, all the way to these points. So this is your sweet 2 RR. This is about 2.7 RR, almost 3, right? So this is what some people can do on this market. Take their market, they can enter the market from this decisional, then make sure their SL is covering both the decisional and extreme, or otherwise wait for confirmation entry. So this is my view for VIX 75. Although I don't trade
Nice,
derivatives,
nice. I
but
think I
you can wait for confirmation before
that's nice.
entering
That's
this
nice.
market.
Yeah, overall, great, 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 great. I hope we got that. I hope we got that. All right, so I'll share my screen and let's just do crash 1,000 and 1,000. All right. So let me share my screen so that we'll see. Thank you so much, Jude. Thank you so much, bro. Um, let
Yeah,
me.
no problem.
Oh, like I said we're on a sell for we're on a buy already for to that zone which we're expecting ourselves. We're on a buy to that zone which we're expecting ourselves. So we're on a buy already to the zone. Then that's for 600 to the zone. Then we'll sell from that zone, right? We bought because of this fair value gap that the price came into, and yeah. So let me go to crash 1,000 and see. I hope we can all hear me. If you can hear me, please make sure you're following. All right. So first of all, we'll go to the daily time frame. Right. We'll go to the daily time frame to look for the overall. Okay. All right. All right. So quick one overall. Overall, we are what? We are bearish, right? We are bearish overall. So we are bearish, right? So um okay. So we are bearish on crash. Let me look at the zone that is reverted from the quarter push, which is that one. And so basically we're on a downtrend. And this downtrend has gone far. If we had seen it from this region, we would have sold from that point and will be targeting this low, all right, which it has. But overall, we're still down. But if you want to still look for possible entry, you could just like what price did here, related from that fair value gap. We have a fair value gap attached to that point, all right, and the price related from that zone, related from that zone, give us a nice push to the down, break of structure to the down, all right. And so the next zone we'll be looking at is this zone. So we'll be looking at that zone, looking to continue the sell from that zone. All right. So do you get that? We'll be looking to continue the sell from that zone. But for now, we'll just wait and wait for the market to show us a clear direction. But overall, it's bearish. We are still looking at the market going down. We are still looking at the market going down.
Yeah, that looks solid. It looks solid.
All right. So that's for crash 1000. All right. For boom 1000 quickly. For boom 1000. So overall, you see, market is bullish. Market is bullish. Overall, so market is bullish, right? So let's check. Let's look at the current trend. Let's see something. What happened? So we're seeing that this previous high have not been taken. So we're expecting the market to take out that 14651.7946 region, right? We're expecting the market to take out that uh, that region. Although you can see that the market is reacting from this other block here, right? So the market is reacting currently from this other block, and we're expecting to push all the way up to take out that old previous high of the market. All right. So for boom 1000, let me go to the 1 hour. Although I don't trade long run, but if you understand, if you understand these things, you understand, you know, you can analyze any market. You can analyze any market. Okay, so we saw that shift the upside.
Sorry, please, I can't hear you again. Anything?
All right, sorry,
Can
sorry.
you check?
So I was saying that hope we got that. Hope we got the boom 1000 and crash.
Yeah, it was clear. It was clear. But
Okay,
for the
good.
beginners,
So
it's not going to be clear for them because they don't know what liquidity build up
yeah, that's
around
true.
the zone is. They don't know what
Yeah,
shifting
that's
market
true.
structure is. So if you want to get into all of that, we're going to be starting the class tomorrow, right?
Yeah,
So make sure you subscribe to our YouTube channel and we'll be dropping some contents for you guys.
yeah. So thank you so much for joining. God bless
Yeah,
you.
thank you for
Like,
joining.
share,
And please
subscribe.
subscribe and comment.
Thank you.
All right.
Jojo, thank you.